Okay, so as always, we'll start off with crypto. When we're just here on Nvidia, Nvidia has had this unbelievable run over the last couple of months. And before we actually look to trade this, we need a pullback. And I ideally would like a pullback into that trend line while we're on this chart. I'd ideally like some sort of a pullback into that trend line. But yeah, that has to come back to there or back to this horizontal. It probably won't happen. Come back this far, but only time will tell. Let's see what happens. We need some sort of pullback. I think it's massively overvalued at the minute. If it comes back to like the $700 mark, we can potentially look at it. But yeah, at the minute, I wouldn't be looking to. Should we get out of Nvidia before the pullback? But the problem is, Marcus, is how do we know when the pullback's going to happen? For me, I don't know. Now, I personally will stay in the trade, and if it pulls back 50%, I'll buy some more of it. Absolutely buy some more of it. But again, if you're trading a CFD, yes, but it depends on then what your trading strategy is. So if it comes back 50% and you buy some, and then it continues dropping, well, then you have to sit through it while it turns again. Whereas if you still have your original trade open, it's still profitable. Yes, you're giving back some of that profit, or what you can do is par close 50%. You can do that, par close 50%, and then you can sit through the second part of it dropping down. And when it comes down, you scale back in with potentially the bit that you par closed, or with a new entry, so on and so forth. So this is a pretty parabolic run. Let's have a look at if I stick the RSI on it. I'm assuming the RSI is massively overextended on this. Well, we're up at 82 of the 80% mark, so there's still room for it to go on the RSI. 85 is the previous high back here. So there's still a little bit of room to go on that. But again, yes, it is massively overextended. So John, what do you mean? What platform do I use? What broker do I use to trade? Well, if I'm trading stocks, I use eToro. And if I'm trading FX, I use Naga, which is MT4. So it depends on what one you're talking about, John. Who do you use for your trading, John? Or have you got an account yet? So let's have a look at BTC. Nvidia is at a fib 261 level, the latest pullback. Yeah, well, look, we can use Fibonacci, we can use all that sort of stuff. Look, we don't know if there's some more good news that continues to come out on this. We can continue going from there, and it could continue running. We never know when this is going to run out. All we do is we get lucky at the top and then go from there. What is Nvidia, when are they releasing their earnings, or has that run because of their last earnings? So that's something you also need to take into consideration. When is the earnings? What are they expected? Now remember, we've had an unbelievable run on this. If the earnings come out as normal, would this run continue, or would we have a drop back? If the earnings come out much better than expected, would you expect this run to continue going? Okay, but also you just have to check when the earnings are expected. So before anyone will close that is definitely something I would look into and work out what's the consensus, what's the analyst consensus across the board, and find out how many analysts have done that. Okay, so someone said the 12th of August is Nvidia's earnings. Okay, so we're a bit away from that then. So we're a month away from that. So then that won't affect what's going on here then. So BTC chart. Now we've had literally a consolidation happen here. We have one day of good news, then it's bad news, good news, bad news, good news, bad news. Now, if we will look at the likes of this chart here, we've had this lower low or stop loss hunting as we discussed. So that's something there. I see John, Ben has put up the eToro link there. Now, the reason I trade with eToro is because eToro are commission-free in stocks. They're commission-free on ETFs. They have a huge array of stocks as well. So that's why we sort of trade with eToro. And then Naga, we use Naga because they have pretty low spreads on the like of FX indices and commodities. So that's generally why we trade both of those. So Ben has put up the links there. If you click on those links and you set up a demo account or mess around with it, you are under our account manager. And if you have any problems, then Alex will chat to you personally. So if you want, click on any of those. So we have that this lower low, but if we look at the RSI, we've had higher highs. So we had divergence. So it's telling us that we have a little bit of momentum to the upside there. We have a little bit of momentum to the upside. It's the overall momentum is going up, whereas it's not here at the minute. Now, again, this is consolidation. We're looking at technicals at the moment where any type of fundamental would come out and eviscerate any of the technicals at the moment. This is not a technical setup. We have the consolidation going on here. Now, with the overall trend, anyone who's done my bootcamp or doing my bootcamp, you would expect this to pop to the upside. But again, we also have a downward trend on this. We have a downward trend. Look, there's a low, there's a low, there's a lower low. So the trend is actually going down on this at the moment. So people are still talking about bull runs, bull run, bull run. This is making lower lows. It would not surprise me in any way, shape, or form if it come down to the 20,000 pounds here. And it would not surprise me if it took off and hit the 60,000. We're literally at that no man's land where it could spike down and hit this one as quickly as it could spike up and hit this here. So this is seen to me at the moment is a bit of a long-term hold. We are sitting and waiting on this at the moment, and it's not something that I'd be looking to trade. Now, for people who are scalpers, anyone who's a scalper, if it comes down and hits anywhere around this 30K mark, you buy it up, and it gets anywhere around the 36,000 mark, you jump out. So there is room for scalping on this. I wouldn't be scalping on the likes of eToro with this at the moment because the spread on Bitcoin with eToro is quite high. So if you're a scalper, I wouldn't suggest doing it here on this. But again, if you don't have any other platforms, then perfect, you can work away with it. But that's what's happening with the likes of this. And make sure that if you have a scalping position and it continues to drop, that you're happy to sit through it. That make sure that if you're buying it here and expecting it to go up, that you're happy to hold on to this long term, because this could drop at any particular time. So just be aware of that. Let's have a look at Cardano. So Cardano came back to that level that we talked about here. Again, if you're scalping, look at this level. There's actually a sideways market. Every time it hits this level down here, there's a really nice entry, and it's popped back up again. So anyone who's jumped into any of those positions along this level here, happy days, and potentially jump out of it here if you're expecting this consolidation to continue going, or potentially part closure position. And if it drops back down here, you buy up another position again. And it goes up to here, part close, comes back down, buy again, part close. And now you have 1, 2, 3, 4 positions of part closed, but you're building a position at the 1.011 level. Make sure that you're entering a little bit above it. Now, as we can see, my red line here, and there's notching in the market. I didn't get triggered in there because of the spread. So it went down slightly below it, but I didn't get triggered in on this particular trade. But again, if we look at the likes of this, we are pretty flat. It hasn't stop loss hunted on the likes of this one for anyone who's trading futures or CFDs on it, it didn't stop loss hunt. It didn't take out this low here. So anyone who's trading a CFD, your stop loss has to be there and your entry just slightly above this level. And if you're trading it, what do I think of the crypto COMP? I have no idea. Okay. It's had a pretty nice jump over the last 10 days. We are coming to a ceiling there. We are coming to a nice ceiling here. But again, trading these altcoins at the minute is literally the same as doing penny stocks. Literally doing the same as trading penny stocks. Just say you have £1,000, you pick 10 of them and put 100 quid across all 10 of them. For instance, if you'd have bought this and it was at 200 quid, it's now at 500 quid. Okay, so you've now 1.5 to 1 on the likes of this so far. Again, I don't have no idea how far this is going to go, no idea how far this is going to run. But again, this is just sort of a pump. I would fully expect this to drop down again unless the crypto market takes off. So again, you saw this, it ran and then it dropped like a stone. So we have this run here again and then drop like a stone. But for me, there is a massive level there at the moment. If it hit that level, I would potentially be part closing my position and then going from there. Oh, wow, Malcolm, what's going on there? Give me 1 second and we'll have a look at Ethereum. So again, Ethereum had a nice little jump as well over this little period. So bounce, and come back, double bottom there again, and had this nice little bounce. We do have this sort of level there. Again, if it hits this level, or even this one, so there may be a higher level on the likes of Ethereum here, back at 2,839. But again, if it comes back up to any of these two areas, I would be looking to par close my position and then going from there. Okay, so again, trade these as you're doing penny stocks, and make sure to come back to these floors. Don't be jumping in like this, because this has had this little run here. Don't be doing that. Wait for it to pull back, because if it breaks this level, that's when we get in. That's when we're happy. It's now made a higher high. Perfect. We're now happy to get in once it's break this level. But at the moment, we're in this channel. Let it hit that ceiling, come back down, and then we jump in at the bottom of these here. Was there one of those cryptos that took off over the last couple of days? Oh, yeah, Uniswap. So Uniswap, similar. So if you look at across a lot of these crypto, they have all jumped off these floors that we've pinpointed. So did anyone take any of those trades? The likes of this, the likes of Cardano, the likes of Ethereum. Did anyone take any of these trades on the crypto off those levels that we talked about last week? The ones that we talked about the week before? Anyone take any of those? Okay, so what is your exit strategy on that then? So you guys, John, I'll come back to your question in a second, but anyone who's taken these trades, what is your exit strategy? So I have Kevin, I have Stefania, or Estefana, or I can't pronounce her name, and Boyan, Steffi. I'm staking. Okay, cool, perfect. So you have them all long term. Brilliant. That is perfect. Now, the problem is when people trade, they don't have a goal before they place the trade. Okay, and that's something that massively affects traders. They'll go, "Oh, Henry, I've jumped in this trade. So what's your plan for it?" I was hoping you would tell me. Well, then don't place the trade. Make sure you have the plan beforehand, and then you stick to your plan. Okay, so well done, anyone who's jumped into this, or any of them, and you're holding on to it long term. Absolutely, Kevin. Perfect. Well done. Good. So you're holding it long term as well. So Nasdaq. So the question we've just had was, I'm in a sell position on the Nasdaq since May. Do we think that we will have a pullback anytime soon? So it depends on where you got in on your sell. Now, for me, I would never short a Nasdaq, or if I short a Nasdaq, the S&P, and the Dow, this is only going to be a very short-term trade. So we actually took a position here short. Now, it didn't quite hit our profit because it came down to here, but anyone that took it got a one-to-one double bottom, then turned around. Okay, so yes, I expect a pullback, and I want to pull back, but I can't see the pullback coming any lower than 14,000. See this level here, this one or this one, these two levels, either 13,900 or 14,000. So I can't see that pullback coming back any further than there. Now, if we look at the market historically, okay, so if we look at the market historically, over the last 15 to 20 years, the only big pullback we had before February was 2018. And that one happened in September. Okay, so if we look at this, we had September here, and then we had a big correction on the market. So we had, I think it was a correction of about 20%, I think it was, if memory serves us right. So from that high down to there, it was actually 24% of a correction. Now that was in September 2008. Okay, so that is the position there. But if you look at the last 10 to 15 years, from mid-June, July, we generally have a takeoff. Now, why do we generally have a takeoff after this, and why the market generally takes a little bit of a bull run is one, that we're in middle of the year, okay? Two, that we generally have after about July, maybe beginning of August, we have traders back. Generally what happens is people go on school, they go on the school run, they go on holidays, traders, they take 2 or 3 months off and then come back, which means then that the hedge funds then rebalance after 6 months and take their dividend, look at their portfolio and rebalance the portfolio after the 6-month period. Okay, which means then that they're now taking new long positions in the market for the likes of the end of the year. So as a general, we get a bull run from about now till about January, mid-January, or the end of February, looking back at historical data. Now, there's no guarantee that it's going to continue running, but that's what we would expect to happen. We'd expect that to continue running, and I can see a pullback, but I can't see a substantial pullback into, or the market crashing. I can't see any of that happening. We have tech stock, which is now starting to run. So the likes of the tech stocks, the IPO stocks, they're starting to run. They're starting to move now again, which means it's that the money is now coming down into other areas of the market. We have the likes of the banking sector is flying. We have tech is flying. We have mining is flying. There's nothing there at the moment to tell us that we're going to get a huge correction. Now, once we get this pullback here, I would expect it to stop. Now, if it continues going, then potentially we might get some sort of a little bit of a correction in the market, but I don't see it. Look, I can't see it dropping that far. I don't see it dropping down to 1297. But again, everything seems to be good. If the Fed raise interest rates, this will affect the market, okay? But it won't. Doesn't matter whether the Fed lower interest rate, raise interest rates, it generally has no effect on the market. We have a correction of maybe 10, maybe 15%, And then people look at it going, well, the market is still cheap now, and we buy it up again. Because if you look at the likes of the Nasdaq, what's the trend here? It's up. The Nasdaq is going up since the day it opened. If you look at the Dow is going up since the day it opened. If you look at the S&P, it's going up since the day it opened. So yes, we may have a correction, but it'll be only 10, 20, or 30% of a correction. Now, I want one of those corrections. I want something like that, which means I can buy it up. I have no positions on the Nasdaq at the moment. I have no positions on the Dow. I have no positions on the S&P as well. So the idea is I need some sort of a pullback that if it happens, then I can go from there. But again, historically, if we look at coronavirus, look at the coronavirus drop. That was a pretty big drop. Now, do we expect, if Fed change interest rate, do we expect the drop to be bigger than that? And that was 32%. So if we go back up here, and we measure down 32%. Zoom out. So 32% will be back there at that level. Do we expect the market to drop that far? Can anyone see the market dropping from 14,000 down to 9,700? No, and that is generally a crash. So 30% is generally a crash. 10% is a correction, and 20% is a big correction. Okay, so remember, if you're shorting this market, a 30% drop is the max short that we generally get in the market, unless there's a catastrophic event, unless there's a tsunami, unless there's the likes of the Twin Towers, unless there's a dot-com bubble burst. We generally have a 30% correction in the market, and then it continues. So make sure if you're shorting your positions, make sure you're looking at it logically rather than going, yeah, I'm expecting the market to drop. Now, I can't say that the market is not going to, but I would expect to drop 10 or 20% rather than the 30%. And I want to pull back into there. And for me, that would be the most logical place for this to drop down to, would be about, what is it, 8 or 10%. Down to there would be 6%. And I would expect that. I would like that to come back down. And if it comes back down to that area, I will be looking at that as a long. Now, there's been some nice 4-hour positions on this as we're going up along. I don't know if anyone took any of these trades. We have some nice little 4-hour positions, bounce, bounce, bounce again. But again, for me, they're massively overextended. They're not trades I would take. Why? Because the market is overextended. I'm expecting a phase 2, but again, it's when. Now we have the Dow hitting that double top. So it'll be interesting to see what happens. So we've had a little bit of a rejection on the Dow. I say a double top, it's more of a triple top, isn't it? We'll go up to the daily. It's more of a triple top. I'm going to make that line a little bit thicker. We're back at this horizontal. We're back at this triple top here. Will this break out, or will we have a correction on this? If we look at the RSI here, there's no divergence. It's at the same level. It's at 60%, so it tells us that there's loads more room for this to still go. Now, I don't generally use RSI. It just happens that it's on the chart there. So for me, I personally would expect it to break and retest. But it depends on how much of a pullback we get on this. Absolutely. Absolutely. But I'd expect this to continue going. Fiddlesticks. I expect this to continue going down to there. And if it comes back to that area, then I potentially take a pullback or take a trade, but it depends on whether the Nasdaq, the S&P are still massively overextended or whether they've had a proper pullback. So the idea is to try line them up properly and get in when they've all sort of had a pullback, and then take the one that has the best entry, whether it's the Nasdaq, the S&P, or the Dow. And we're going to just have a quick look at the last couple of trades we took. So copper is now 1% up. I'll have a quick look at GBP USD as well before Ben jumps in. Okay, so copper is 1% up on our particular trade. So my first entry on this was there, stop loss was here. So I still have that trade measured. So I know we got triggered out because of the contract closing, then jumped back in. So on the original trade, 2.7, 3.7. So I'm up a little bit over 1% on this particular trade. So I took the trade again. So we're running quite nicely at the minute. So well, let's see what happens when we get to this level here. Let's see what happens when we get that level. And will we get another little pullback or will it continue? But I'm in this position long term. I still have, is it this position I still have open? No, it's not. We closed that one. So I have this position and let's see if it runs. We'll see if this continues to run. I expect it to continue running. Seasonality, well, it's not that a seasonality. We do have a generally a bullish month this month. But again, it's the demand with the likes of the shortage of chips, with the likes of the electric vehicles, the lithium power, all that added up tells us that this looks like it's going to continue running. We have Morgan Stanley is still running really nicely. So chart. So the market's not open again. So this is the original position. So we still have that running. So this is our second position on it. So it's running quite nicely at the moment. We want that to run up, hit a 3-to-1, and then come back down to there. So if we look at the two positions, so this one is par closed. So we par closed this one, and I've moved my stop loss to break even. So look, see this, it's going to cost me 12 quid to hold on to this trade, but I've moved my stop to 15 quid, which means then that even if this comes back and stops me out, I lose more money whatsoever on this one. The second trade is still running the full trade. So risk 100 quid. My target is 300 quid and we're 125 quid up now at the minute. So let's see if this continues to run. And then the only negative one is China. So China has been hit pretty bad with the Delta virus. So I got back into this trade, but remember my stop loss is down here. So I don't actually expect it to be hit, but again, with this Delta virus going on at the minute, it may actually stop out, but I'd expect this to turn around before it stops us out on this particular trade. And a quick look at GBP USD. Okay, so GBP USD, Eugene, are you looking at this as a long or short? So you're looking to long this. Okay, so every week, every Monday or every Sunday, I do a list here of what's hot and what's not, what I'm looking to trade. So GBP USD for me is a sell. Okay, so we're looking at GBP, we're looking at USD, and if we got down here to the strength matrix, it looks like US dollar is +6 and GBP is only +1. So it tells me that US dollar is stronger than GBP. So for me, the trend is down. Dollar is stronger than GBP. So it's not something that I am looking at. It's not something I would be looking to long. I'd be looking to short this position. So what is after happening here? So we have the overall momentum going up here. So yes, we have the overall trend going up. If I get this segment here, look at this as a trend line. We have this whole trend line along here. We've now had a break and retest of that. So it's now broke, retested, it's made a lower low. So if we look at this now, we have a phase 1 to the downside. We have a phase 2. We now have a phase 1. Now we have a phase 2. The non-farm payroll data was a little bit better than expected. So for me, I'm still expecting this to go down. So what I'm looking for are the areas that would indicate to me that this should drop. And there's a level there. So there's a level at that point at 1.4. And there's nothing really jumping out at me before that level. Okay, so there is a much smaller one here, but for me, it's not. I wouldn't be taking the trade short of that. I wouldn't be taking the trade short of that. For me, I would want that to come up to there, and if it comes up to there, I would look to short that market again. So that's what I'm looking at, and that's where I would be looking to trade this. Come up double top, and then I would look to short that. Okay, Ben, will you have a look at gold there for these guys?
Yeah, I could take a little look at gold before we jump into some stocks. That's not a problem.
Participants, Ben host.
I can definitely do that. Have a little look at gold, and then I'm going to catch up with the stock side of things. Have a little run through, update you on a couple of positions, and also a position that I'm taking on the market open. So I'll just share my screen. You should all be able to see my screen here now. So I've just popped it onto my eToro. Just let me know that's the case before I start rambling on. It hasn't loaded properly for whatever reason.
Yeah, we can see it. Oh my God, Ben, you had a red month. What's going on?
I know, I had a red month. First red month I'd had 1, 2, 3, 4, 5, 6, 7, 8 months in a row of making money. And then
Guys, I think you should stop following Ben.
It's all over.
You have an idea what he's doing. Stop copying him.
It's all over. That's it. I'm retiring. I've lost it. It's all gone. The strategy's broken. Doesn't work anymore. That's it. I'm giving up. But yeah, no, we finished obviously June down 0.34%. So baby loss. Obviously, we've only had one trading day, 2 trading days. So basically breaking for July. So that means nothing as of yet, but we'll see how we get on. In fairness, statistically speaking, we was well overdue a losing month, because if we go down to here, so if you look here, look, I've got my current win rate or profitability rate is 55.1%. So I win just over the 50% of my trades. But what you'll notice, the key difference here being is obviously the average profit there is more than 3 times the average loss. So that's where the kind of key difference comes in, guys. And that's the sort of thing that you should be focusing on. It's just kind of relevant to obviously touch on that today. Is don't be sitting here expecting to get 80, 90% win rates. If anybody ever tells you they've got an 80%, 90% win rate, they're talking crap, and you should be paying no attention to them. But basically what you're always going to be typically looking, obviously some people average a little bit higher, some a little bit lower. Your average kind of professional, if you will sit typically speaking between the 50 and 60% mark. Some a little bit less, some a touch higher, and obviously depends on your trading style. And just because you win on average 55% of your trades doesn't mean there can't be periods where you're averaging at 75%, the same as sometimes you can be averaging at 30 or 40%. This is obviously averages over long periods of time. The longer period of time the data is formed over, the more accurate the data is going to be. But that's a key thing to kind of watch for. This isn't the end of the world, your actual number of trades won. Have a little look at that and have a look at your statistics. What you'll find a lot of people actually have is they actually win more trades than they lose. But then what ends up happening is their average loss is bigger than their average win. And that's where a lot of traders go wrong. But just kind of keep that in mind and check your statistics and keep an eye on that, guys, as you go through. Obviously, my risk score is only 3, which is good. We've got a nice low risk score. And we'll obviously see now how the back half of this year now actually plays out. Now, before I get into the stock side of things, as promised, I will touch on, excuse me, gold. Who currently has any kind of view or bias or anything of that nature on gold? Are we bullish? Are we bearish? What are we thinking, guys, before I start breaking it down? What do we reckon?
The missus is bullish on it. She wants
gold.
Yeah, she wants gold, yeah.
She wants gold, yeah. She'll be lucky to get a cup of tea. Bullish. Seems most people are bullish. So let's work our way through the various time frames here, right? So let's look at this structurally here for a second. So we'll start ourselves off. We obviously have the massive base that we obviously had down here. And we had the big base pattern here that we obviously came out of, right? So we broke back out of this right in the back about just before the halfway point of 2019. We then obviously had this huge bullish run. We peaked out at just over $2,000 per ounce. Since then, it hasn't been particularly exciting. So we've obviously had this larger correction, bit of a pop up. So we got the base here at about 1677, bit of a pop up back into 1914 highs, and we've kind of drifted off again. And it hasn't been the most exciting thing in the world since we had this big bull run sort of back end of 2019 and into 2020. It's been a bit dull, in all honesty. Now, on the weekly here, there's nothing massive to point out. I think the only worthwhile things really noting here, firstly, obviously the key high. And of course, I would then obviously note on here as well this low point. Now, the reason I'd want to note on the key highs, this would be a big psychological target point. If we do start to generate a big bullish run here, a lot of people will start to be talking basically, can we get back up above this previous high? Can we start testing those all-time highs once again? This low here would be very important because from a weekly structural perspective, if this is broken, this would then completely reverse this previous bullish trend. Now, you could argue that maybe we're getting a slight lower high form here, but the majority of this move down is basically one bar. And I don't like to, sort of class a phase that is basically just made up of one bar. I mean, if we look here, we obviously had the bullish run up, bit of indecision, inside day, massive red bar. Then we've gone inside day failure pattern, or inside week failure pattern, I should point out, for anybody that's done my course. Obviously be able to notice that, and then a bit of a move up. The majority of any kind of movement over the last few weeks has been just on a singular week. So for me, that doesn't really qualify as a phase from a structural perspective. Now, I will continue to keep an eye on it, because if we fail to get any buy momentum now and run down, you would expect a move down to 1676 to try and challenge these lows, and this would then be more confirmed as a lower high. So just keep an eye on that, right, guys? A lot of people are very quick to start looking at candlestick patterns and stuff like that, but you haven't even looked at the structure of the market. A candlestick pattern is completely irrelevant if you're not using it in line with basic structural rules such as trends, cycles, etc. A candlestick pattern is what most people look at, and that's why most people fail. 90% of retail traders lose money. So do you really want to do what most people do? I'll leave you to obviously answer that. Now, looking at this here, on the weekly, we haven't got any big clues. So let's go down to the daily and see what we're looking at structurally here on the daily. So this was obviously the big run up that we obviously had at the back end of 2020, or midway through 2020. We then obviously have been drifting down in this bearish trend. Double bottom back here at the 1675 level, the big run up. And then again, we've obviously pushed back over. To me, on the daily here, there's nothing massively standing out either. I think there's too many conflicting things on various time frames. I don't think there's anything that's clear enough to say, right, yeah, we're definitely bullish or definitely bearish. I think that we've broken the bearish trend that we had for a period of time there, but there isn't enough clarity on the trend here. On the daily, we haven't had any big clean cycles really. The big sell-off and a little bit of a recovery, but is this now just going to be a pop before we roll over? Remember, on the weekly time frame, we're arguing that this is potentially a lower high, although we need obviously a little bit more downside momentum. So I think for me here, I really wouldn't be committing to a direction. Remember, guys, you can be neutral. A lot of people seem to have this thing in their head where they always seem to have to be bullish or bearish on something. Most of the time, the market doesn't trend. In fact, it only trends about 30% of the time. So when you're taking that into consideration, more often than not, there isn't a trend. So if you're constantly trying to find a trend or constantly trying to find a view of being bullish or bearish, it means, technically speaking, 70% of the time you're actually going to be wrong. So don't try and force it. If it's not there, if it's not obvious, if the structure of the market doesn't really stand out, then just leave it. Just move on. I mean, for me here, I would sit there and say there is too many signals of a rollover to the downside, but there also isn't enough clarity of a rollover yet for me to commit to a bearish view. So I'm going to monitor the price action, monitor the structure, how we form up, see if there starts to be any clues develop, and then you can act from there. Always keep that in mind. Does that make sense, guys? To get what I mean by that? Remember, you can be neutral. There's nothing wrong with being neutral. You don't have to be bullish or bearish. Everyone always seems to have this thing in the head of they're always trying to buy or sell something. It's one or the other. And like I say, if the market trends 30 or 40% of the time, it means 60 or 70% of the time you're actually technically wrong. And if you're trading in the wrong direction altogether or trying to force something, we also know how that's going to play out. And this is, again, why most people lose money in this market. It's not rocket science. People just do dumb shit, basically, a lot of the time. It's as simple as that, right? So for me, gold is very much a sit on the hands type of moment. I don't think structurally we're strong enough on the daily, weekly, etc. Multiple time frame analysis there doesn't really point in any one particular direction. There's no clear and obvious cut levels, patterns, or anything like that really for me. So I would definitely be sitting here and saying, well, I need some more to actually form up. Okay, so that's my view on gold. Silver, just because I know somebody's only going to ask about it, because we're obviously talking about the metal side of things. If we look at silver, silver is even more undecided for me. Whoops. Wait, that's jumping around. If we look at the weekly here, we can obviously see that even more indecision. I used to joke about and call silver gold's bitch because I say it always does what gold tells it to do. It just follows gold. So obviously when we had the gold rally, there was no surprise to see silver getting dragged up with it. But then this is even more indecisive. If we have a little look at this here, we've obviously got the resistance level. And then we've also got the support level, and that's basically the range we're stuck in. I think if anybody's trying to trade this at the moment with any kind of longer term projection, you're purely flipping a coin. If you're looking at more intraday and there is something that meets your intraday rules, by all means, that's obviously for you and your strategy to decide. But I think if you're trying to, predict the next trend on this, you're literally flipping a coin. It's a bit like when you look at Bitcoin at the moment, everyone's trying to predict the next cycle and the next trend. If I can actually spell, it'd be helpful, on Bitcoin, right? But if we look at a chart on Bitcoin, it's not rocket science. We're stuck sideways. Everyone going, yeah, I think it's going to break this way. I think it's going to break that way. How about, light bulb moment here. I don't want to, blow anyone's mind, but how about we let the market tell us where it's going to go next, rather than us trying to magically predict, right? We're stuck in this massive range. Everyone's too busy trying to look, like some absolute wizard here and trying to predict the next thing that goes on, or you could just let it tell you. You got to remember something like Bitcoin, but the same as with most cryptos, people sit there and try and justify things on a fundamental view. But the reality of the situation is, because we don't completely know crypto's role just yet, it is more speculation driven. It's emotionally driven and it is hype driven. Now that's fine, because what it means is you can trade it more technically, but you have to know what you're trading. The problem is most people are just trying to buy a crypto thinking it's going to be the next thing to 10,000 times their money and they're going to make millions without doing anything. Most people are trying to trade it for the wrong reasons, or they've talked themselves into the fact that all of a sudden it's going to replace every single fiat currency going, or obviously replacing everything in the sense of day-to-day payments and stuff like that, and everything else will become obsolete. So everyone's trying to make these massive calls, but just wait for it. Let it tell you. When the market's like this, let it tell you. It's the same with silver, same with gold. Let the market come to you. Don't try and force it. Okay. So that's my views on those. I just wanted to, I know obviously Henry's touched a bunch of cryptos, but just kind of touching on that because it's obviously similar in structural terms to silver and gold. From the stock aspect though, just to kind of update you here. So some of you are, I can see from the names that are in the list here, some of you are sort of newer, or I don't sort of recognize your names, just to kind of bring you up to date. This is TC2000. I use TC2000 for my charting, for its functionality, for the scans that I can run, all this kind of stuff. I have various different tabs and windows and stuff like that that I run scans and stuff on. But what I'm actually doing is obviously a lot of the majority, I should say, the bulk of my portfolio will be made up of value investing positions, i.e. companies I believe for one reason or another are undervalued. So I'm looking at their balance sheets, I'm looking at their income statements, I'm looking at the cash on hand, the debts, all this kind of stuff, the cash flows, and sitting there saying, right, I believe it to be worth X, I can currently buy it for Y. And if I can buy it for less than 30% of what I believe, as in a 30% discount, believe what I believe it could be worth, i.e. I believe something's worth $10 a share, I can buy it for $7 a share or less, for example. That's the sort of thing that I'm looking to in its longer term investment plays. Now, what I also do is I will look for slightly, when I say shorter term, you can still be holding them for months, but it can be shorter term relative to the other things that I could be holding for years. is looking for more breakout momentum based plays. Now, this requires a little bit more day to day. So the first half of this year, I haven't really done it so much, but the second half of the year, I should have a lot more screen time and day to day to be able to keep on top of things. So I've got a couple of position runnings in with these, but what I've done is on TC2000, I've also bought them here. I don't use TC2000 as my broker. As you can see, I already use eToro, but because I've actually got a set stop loss on these, because although I'm still buying the underlying asset, it's more the pattern that's giving me my entry point. So it's a time triggered entry rather than just a value based entry. There's an actual physical stop loss that I want to have in place. So, for example, Zebra, I've actually got a physical stop sitting in here at around 491. Right? Because if it gets to there, the pattern's failed, and therefore I don't want to be in that trade anymore. With my other investments, they're more fundamentally based. So what I've done is I've also bought them on here. Obviously, it's just a practice account on here, but that way you can actually see where the lines are. So as I manage the trade, you can see exactly where they are. With my other positions, I obviously don't have a stop loss. So we've got ZBRA, which we entered last week. This is up slightly. We've got LSXMA, which is Liberty Media Corporation. This is the A series shares, by the way, not the Bs or anything like that. I've got this on the breakout. That's sitting ever so slightly offside. And I obviously have a set stop loss on there. But there is a couple of other things that I'm currently watching. I'll continue to update you on these. I've got TPX, which is Temper. Does anybody have a Temper mattress by any chance? It's the same company. These are, if you're looking at the name and thinking, I've got a mattress, a Temper mattress, it is the same company. So TPX is the ticker symbol. Temper Sealy International is the full name. What we've got here is a classic momentum situation, which I look for. So first of all, looking at the trend is, of course, very clearly bullish here. What I then look for is a catalyst to be running with that. Sometimes what you can have is a stock starts to trend, but there's no real catalyst behind it. So therefore, the trend will fail very quickly. If you have some genuine catalyst actually driving that trend, what you then tend to find is the trend will last a lot longer. So what I have on there is the blue dotted line, which represents the earnings. That's the last 4 years of earnings. So i.e. each quarter, it updates with the most recent 4 reported quarters. And you can see that that is trending up. So the catalyst basically for this current strong trend is the fact that we have strong earnings trending within this stock as well. Despite the fact that the stock has had a big run up over the last 12 or so months, we're actually still sitting at a PE ratio, a trailing PE of about 17, which means that the earnings have been growing very quickly along with the growth of the stock. So that's obviously very, very good to see. Now, what we've had in line with this, obviously during this trend, we've then had the recent actual consolidation pattern, right? So if I just bear with me, draw this on here. So we obviously have the flat top and the slight higher low. So this is what you refer to as an ascending triangle pattern. So we have a flat top and the higher lows. Think of this as a coiling spring, right? So it's loading up, it's squeezing, the momentum's breaking it, squeezing up. What we're then looking for is obviously a breakout in line with the momentum. Now, what's key to have with this for the breakouts that I look for is we then get an increase in volume, which we can see down the bottom there. The increase in volume does, of course, not guarantee anything, but it shows you that the breakout is now coming as a result of additional buyers. If this market is going to continue to push it higher, i.e. this stock is going to continue to rise in price, you need to have an increase in buyers. If you are finding that you're getting a stock breaking out, not because of the actual increase of buyers, but there's just basically low volume in the stock and it's drifting higher, that's not the sort of stock that's very likely to actually continue pushing through. So I teach these patterns in my course. The breakout patterns you're looking for, this is a continuation breakout pattern. Got the breakout there. Obviously, the volume is increasing with it. And what I'm now looking to is an execute a position in about 25 minutes time when the market opens, unless we was to suddenly gap right down here somewhere or something. But all being well, I'll be looking to execute this on the open. So my stop loss will go nicely tucked underneath here inside. I'll obviously post the exact entries and entry figures and updates and stuff like that in the members area, but I'll be tucking my stop loss down underneath inside to keep it out of the way to allow for any kind of retest, but also close enough where if the pattern then fails, I will be out of the stock. And then from that point, it's a case of going, right, let's now just see how far the momentum takes us. If this now wants to continue trending for the next 6 months, I will continue trailing and following the stock for the next 6 months. If it turns around and stops me out in the next 2 days, I take a very small limited loss. If I've only bought a position with 1% of my capital, and it's unleveraged, and let's say I lose 10% on the stock, that's only 0.1 of my account that I've lost. So am I really going to be bothered about that? No, of course not. So obviously that's where the risk management side of things comes into play. So that's the position I'll be entering on the actual open. I've then got a couple of other stocks that I'm kind of keeping an eye on as well. Amazon at the top right here is one of them. We've got this big consolidation pattern currently squeezing up. What I'm looking for and what I'm monitoring for is here, do we get a breakout? We've got the earnings catalyst. We've got everything driving it higher. Do we now get a breakout on the stock, and do we get additional buyers coming in on the momentum? Same thing here with TER in the middle, so the bottom middle. We've got the stock squeezing up. What I'm looking for is, do we break out? When we do, or if we do we get an increase in buyers? Same thing with ecom, right? We've got a consolidation here within a bullish trend. We've got earnings rising. We've got the catalyst there for the stock to obviously be trending higher. If we get a breakout, do we get more buyers? It's as simple as that. It's not rocket science. We're not reinventing the wheel. If a stock's going to go higher, it has to have a reason to go higher, and it has to have the buyers to make it go higher. If it doesn't have those things, the sustainability of that move higher is very slim, basically. So stocks move around all the time. They do all sorts of funky things, but we're not looking for those crazy, wild things. What we're looking for is the consistent moves. We also know that I'm only going to win about 55% of these trades. But the idea is, as you saw on my profile there, is that the average winner is 3, 4, whatever times the size of the average loser. It's as simple as that. And if you can keep yourself to around about a 50% win ratio, but your average win is 2, 3, 4, 5 times the size of your average loss, you're going to make a lot of money over your lifetime, right? It's as simple as that. Again, we're not reinventing the wheel. We're not doing something miraculous or completely out there. It's about being consistent. It's about being disciplined, being strict, and having an actual clear-cut approach that you continue to follow. Does that make sense to everybody? Is everybody kept up with that? I wanted to make sure I kind of got everything in there before we finished up at 2 o'clock, because I know people have to shoot off, but does that make sense to everybody? So we've got obviously those 2 stocks that we're currently managing. We've got TPX that we're going to be buying on the open. And obviously we've got those 3 there, Amazon, Ecom, and TER that we're going to be monitoring. Can everybody just give me a yes or no if that is all nice and clear and understood? Or if you, of course, have any questions, just type question and I can wait for you to type it out. All good and understood, yeah? Awesome. Good. Well, look, it's as simple as that, guys. That's kind of what I'm keeping an eye on in the market at the moment. Is there anything you kind of want to add in there, Henry, before we kind of finish that up there?
No, all good.
Yeah, all good. Cool. All right, guys. Well, look, it's as simple as that. All right. Obviously, if you have any questions, please feel free to email us. I'm just going to pop the email address in here for you now. traderstream.co.uk. Please do feel free to email us with any questions, suggestions, anything like that that you have. If you could obviously make sure you do that, that would obviously be great. And then what we will obviously do is make sure that we see you on the next webinar if you've got anything there that you want to ask us there. All right. Outside of that, guys, have a very good trading week, and I will speak to you very soon. Take care, guys.
Bye-bye.
Thanks for listening. Don't forget to give the podcast a follow for new episodes. Find us online on Facebook and Instagram for more market information and insights. Until next time, good luck, traders.